Hello friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Century Textile. Is it the right time to buy the stock or is it an avoid? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Century Textiles, here's small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And if you pay $100 upfront, then you get 1 year access by paying for 10 months, so that's a 20% bonus. For detailed market or company talk, you can directly email me and we can work things out. Now, the company Century Textiles was established some decades ago and engaged in manufacturing of textile, cement, pulp and paper, and real estate. So, they are into multiple businesses like a conglomerate. It is prevalent in South and Central India mainly. The market cap of the company is around 8,000 crores. Produces Portland cement, ready mix concrete, and dry mortar products. It also has a stake in real estate projects, plus having vast paper mills. A decent dividend yield it always produces. It has reduced debt appreciably over the last 2 3 years. If you look at the numbers, so these are March 21 numbers versus last year. So sales were at 840 crores versus 780 crores, so it was up by around 7%. Company got into losses and profit was to I think minus 8 crores, so got into losses from profits. On the back of deferred taxes, the profit came in. Higher raw material cost has also hurt the numbers. Deferred taxes has hurt the numbers. Although return on equity of 22% is very decent in the, you can say, in the construction industry, operating profit margin of 14% is decent enough when you consider that it's a high gestation period kind of a business, and it is a debt laden business after all. It trades at 2.5 times to 3 times earnings, which is not extremely expensive when you consider other you can say stocks in this domain. If you look at the performance of the stock now, stock is up nearly 100% in the last 12 15 months. In fact, more than 100% it has gone up. It has a market cap of 8,000 crores, and during the pandemic, and in the first wave of pandemic in 2020 March, the market cap was around 3,500 crores, and not many people were looking at the stock. So it has surged appreciably, mainly because people understand that in such a business losses and profits would come about, but the sales quotient is the major thing, and it has been doing very decent sales. So numbers have not been that great, but numbers have not been bad either. It has been okayish, and due to which the stock has risen. But now, considering the valuations as to where the numbers stand, it looks like that the valuations is slightly stretched. Remember that the numbers are hampered by extraordinaries. We have deferred taxes, we have extraordinary costs, etc. So a clear cut picture would come up in the next few quarters, and then only we can decide whether the numbers are dipping sharply or not. Decent promoter and institutional holding is there in it. Remember that the business is capital intensive, high interest burden, etc., as I have mentioned. So that's why the numbers look up and down. It's not look that streamlined compared to any, you can say, consumer company. So in that regard, you need to take a call with respect to the numbers with that in perspective. Although I still believe consumer oriented stocks or simpler businesses better to go with. So my call on the stock is hold if you have it, do not sell it. But if you don't have it, then buy into simpler businesses. Even if you want to buy into real estate or infrastructure, buy into very good quality, top-notch companies. I have always talked about in my live sessions, in real estate, in cement, etc. Larger cement companies, they all will continue to do well if this space does well. No need to probably buy into second or third tier companies, because this sector in itself is extremely risky to get into, and then when you buy into smaller companies, then you just increase your risk. That's just about it. So cement sector will do well for the next 2 years, it looks like. and probably next 6 months could be challenging with monsoon around and then probably the third wave, but from 2022 onwards it looks like a clean picture that things will really get better going forward. So if you would really want to buy into large cement companies and avoid trading into such smaller companies which could be extremely volatile. So this was my video on Century Textiles. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.